Welcome to the 3 Things We Learned This Week. I'm John Augustine, Chief Investment Officer, Huntington Private Bank. Well, number 1, the Fed met. Now remember, they met in June and surprised markets a little bit by how hawkish they were. Well, this July meeting, no surprise. They kept their base benchmark interest rate at 0 to 0.25%, so no change there. They kept their bond buying program at $120 billion a month. No change there. Now, what they did say is the economy is heading in a positive direction where they will continue to assess the data to see if it's time to taper or bring down some of their bond purchases. So no real news there, but we just wanted to report it to you. And by the way, markets didn't have much of a reaction either. The Fed meets next at the end of September. We'll obviously follow up and get that news to you. Second thing we learned this week, GDP. So we got a second quarter economic output report under GDP, gross domestic product. Now, overall the number was less than expected, but what caught our attention is you and I were out spending money in the second quarter. So the segment that represents personal spending rose 11.8% annualized in the second quarter. Now that's the third highest number since this report started in 1947. There was a period in 1950 it was higher, then coming out of the great lockdown last year it was higher. But you and I were definitely out spending in the second quarter. Now, what else caught our attention is that we shifted our spending more from goods to services. Now, some companies are also relating this in their earnings reports, but we were out spending more on services in the second quarter. And that makes sense, right, with the reopening of the economy. But that was a big number, 11.8%. We were out spending. Third thing we learned this week, earnings. They continue to amaze. So for second quarter earnings, S&P 500, a little over half of the 500 companies have reported so far. Earnings are up 89% year over year. Now that's on an expectation from sell side of 63%. And it's the highest number we've seen going back the 30 years that at least I've been in this business. Never seen a number like this. So earnings continue to amaze. Now stock prices, they're not really going anywhere. So in the end, what's happening is actually stock valuations are coming down. They're becoming more attractive because these earnings are going up so much. And by the way, forward earnings estimates really aren't coming down either. They're staying up there as well. The pace slows down, but the earnings estimates are not being cut. So this earnings season continues to amaze. We'll probably be reporting this to you again, but just wanted to give you an update. Those were the 3 things we learned this week. Hope you had a great week. At Huntington, we're here to look out for you. If you need anything, give us a call. Thanks. Bye.